What's going on, you guys? It's your boy Jeremy Cash, live and direct on the Pipology channel. It's about to go down. Let's get it.
Let's get it. It's your boy Bobby Will, aka I am Bobby Will. That link will be posted down below. Y'all can follow your boy on IG. Loso, what's good, bro?
Yo, what's good, everybody? This is Loso06, man. Follow me on IG and follow me on Facebook at Los Sanders. Yo, I got on some fresh socks. You probably ain't gonna see them in my cartoon version, but the next time I get in this video, I'm gonna show you these clean tube socks. This ain't got nothing to do with trading, but I just want to get on the mic for a second because Bobby is supposed to explain some fire to y'all, and I'll be honest, I don't know how he learning this stuff, man, but he a beast with the TA, man. Let's get it, B.
Straight up, let's get into it, man. So I'm gonna show you guys today, we're gonna talk about how to trade long-term trades using supply and demand zones. Okay, now this is going to be supply and demand zones. We're also going to show you guys support and resistance zones, identify some of the key differences between the two, and this is going to be a fire video, bro. This is going to show y'all a strategy that y'all can use over and over again to mark up your charts at the beginning of the week, wait for the price to hit your zones, and then you sell or you buy. Simple as that. Easy. Let's get into the next segment. Yo, what up, you guys? So here we are back on the PC. Okay, so we just want to show you guys real quick how to draw these zones, how we take these trades, why we take these trades, where we identified the zones, where we identified our entry points, and where we're identifying our take profit, potential take profit. All right, also the stop loss. All right, so I basically removed the zones I already had drawn on this chart because I want to redraw them from scratch and show you guys exactly where we decided to draw these zones and why we position the zones the way we position them. So the first thing that we saw here, guys, one of the very first, ignore that McAfee, whatever. We'll worry about that later. One of the very first things that we saw on this chart was that there was an RSI above our overbought level, which is the 75. Okay, now how we were able to identify this is we actually got a push alert to our mobile phone. All right, so I got a push alert to my mobile phone that told me that this RSI was overbought, and then when I go to the charts, I'm able to go and look at these candles right here. All right, I'm able to go and look at these candles. It doesn't show up when I zoom in. When I'm at this zone level, I can see it. I'm able to look at these candles right here, and I'm able to see that these candles are highlighted. Okay, these candles are highlighted in orange. Okay, this is a custom developed indicator that we have here. Okay, this indicator is built around my boy Jeremy's NBA strategy. You know what I'm saying? So we took that. One of the key tenets of that NBA strategy was the RSI level, the overbought and oversold level. So we had an indicator custom coded that would give us custom push alerts to our mobile phone. I know Jeremy had introduced another indicator before that he was using for this, but we went ahead and went to a developer and had an indicator custom coded so that we could customize the text, so that we could customize the features of it, so that we can have something that's fully custom, that we can use it exactly the way we want to use it and get those push alerts to our mobile phone and have a message text be something that's relevant to us. So that indicator did send us the signals that we were in an overbought zone. Okay, so when we realized we were in an overbought zone, we wanted to go and look for support and resistance, right? We want to look for supply and demand zones. Okay, so I'm going to zoom out here really quick, and we're going to look to see, here to see where our zone was located. Okay, if there's a zone in this area. Okay, now check this out. What we saw here when we went to look for this zone was that we saw the market made some consolidation right here in this area, right? With coincidentally some divergence, which we'll talk about divergence in another example. But we saw the market make the divergence here, and it had some consolidation right here in the zone. It peaked out, right? Typically when you see these zones, there's also going to be wicks You're going to see price rejection to the top side. You're going to see orders being filled, price rejection to the top side. And then you're going to see the market make a strong push to the downside. You're going to see a strong push to the downside, okay? So what we wanted to do was look for the last bullish candle that happened before the market made that strong push, okay? Now in this case, this zone is arguably this entire area right here, this entire consolidation area, okay? So what we did for this zone was we actually decided to use this candle right here because the market formed a little bit of a base right here. And then after that base, it made a strong push to the downside. You had a 3-hour push to the downside, another small base here, and then you had another push and a little bit of a consolidation. All right, so we chose this candle, but we wanted to respect this wick, and we wanted to respect this resistance line right here. So we identified some clear resistance right here, identified a clear zone right here, consolidation zone, supply zone right here. So what we did was we go to our insert, okay, go to shapes, pick out the rectangle, and we're going to start from the top of this wick. All right, and we're going to go down to the bottom of this candle right next to it, this candle right here, and we're just going to highlight that zone and identify that zone. Okay, okay, now what you're going to see is that with this zone, look at what the price did right here in this zone. Okay, we got our RSI showing us that it's overbought. Okay, and we also have the wicks right here. We've got a doji right here. Okay, we got a reversal pattern right here. Okay, seeing this strong reversal pattern. And so now what we did from there was we just looked for a price reaction. And once we saw price make this reversal pattern right here, actually once we saw the doji form, and we jumped in a little early on this one, we got the reversal confirmation, and now we're in this trade. You know, we're in this trade. We're seeing a strong reversal happening at this price level. We're expecting price to continue to reject this level, and we're expecting a sell-off to occur soon. All right, so that's GU. All right, now I told y'all we was going to talk about the divergence a little bit, so let's get into divergence a little bit on a different example. This is the Euro GBP. Okay, so on the Euro GBP right here is where we're seeing the divergence. Okay, as you can see, guys, with this trade right here, we had a previous zone that we were using before. We actually caught a decent little buy right here out of this zone. But let's go and go ahead and remove this objects off the chart. I don't really need to see that right now. Let's find that rectangle. Where is it? There it is right there. Rectangle, don't need it. Horizontal line, don't need it. Go ahead and close that out. So this trade right here, as you guys can see, similar setup down here. As you guys can see, we did get that RSI signal. That's a little bit hard to see from this zoom level. Let's try to zoom in a little bit more. So from this zoom level, you can see that candle was highlighted with the blue color. And as you can see on the RSI, that's when the market was oversold. So at that point, you know, once we got that signal, we, you know, also saw the strong price rejection here. That allowed us to go ahead and determine that there's potentially a zone right here in this area. You know, we want to go ahead and look for that zone. All right, so what we did was we went back. Okay, went back. Okay, we got to go back pretty far on this one. And as you can see, back in June right here, you had a strong, was the last time the price touched this level, and you had a strong base that was formed right here. Hold on, I'm actually gonna take profit zone. I'm not in my buy zone. Let me scoot over a little bit. Okay, here it is. Sorry about that, y'all. I had to go back kind of far. But here it is right here. So we'll zoom in on the charts a little bit. As you guys can see, there was a strong consolidation right here in this area before price started to go on its bull run. All right, so what we did was we started right here at this consolidation zone. We're gonna go insert a rectangle, and we're gonna go from, wait a second, I'm gonna go from the top of this zone right here to about the bottom of this zone, and we're just gonna go all the way over to our current price. All the way over to the current price. Yup. And boom. As you guys can see, here's our zone right here. Alright, now typically one thing that we want to tell you guys, definitely with these zones, the fresher the zone, the more you're going to see a strong price reaction. And we may have drawn that one a little bit too tall, but the fresher the zone you have here, the stronger the price reaction you should expect to see. And then you want to go right below that zone, probably like 10 to 20 pips. We want to give ourselves a little bit of space here with this one. We could probably pull the stop loss up a little bit, but we want to just give the trade room to develop. So then we're going to go in, look a little bit closer. Fix my bars right here. There we go. All right, so as you guys can see, once price had entered this zone and we started to see the divergence, then we were able to determine that, okay, price is right inside of the zone. We got divergence here. So we went ahead and went in for the buy on this trade. And let me actually go in and let's see, objects list. With my rectangle. There it is. Say parameters. And let's see that value. I'm gonna bring that down a little bit to about the 1.5 area. Boom. And then we're gonna bring that down a little bit to about the 245 area. Alright, so these zones, you know, they're not absolutely perfect. A little bit difficult to draw. I think for this one I may have actually initially drawn it on the 4 hour, which probably made it a little bit easier to see and identify. But yeah, that's how you do that, guys. That's how you go in and find those areas. You go in and find those zones. As you guys can see, there was a strong price rejection at the same time that RSI level got really low in the same zone. So now that we're seeing this divergence here, price back inside of this zone and consolidating, we are anticipating that price will rally from this base right here. So we're anticipating a rally from this base. We've got the divergence, we got price inside the base, and then we just go up and set our take profit at a nice round number, and we're just going to sit here and we're going to let this trade develop, guys. Most of our positions are currently already in profit, and we're just letting this position kind of develop. You know, we're gonna get this trade some time, man. Let them pips fizzle. You know what I'm saying? Let it cook, man. But that is our time for the day, you guys. We did want to give you guys a brief overview of supply and demand zones, trading with that. Also wanted to mix in some divergence, show you guys a little bit more how to increase your win rate using that NBA strategy, using divergence and using supply and demand zones. All right. Stay tuned, guys. We'll see y'all in the next segment. Peace.